Hey guys, Scott Parry here, founder of Crown Money. Just wanted to say welcome to the new year. Going to go through some strategies which we've found a few clients have been falling into this trap of consumer credit. And what consumer credit means is credit cards, buy now, pay later, car loans, caravan loans, and the work. So first things first is all this is bad debt. What does that mean? That going into debt for these sort of purchases doesn't generate an income, therefore it's not tax deductible, and just increasing your cash flow bleed to fund these purchases. So we've seen in the past some clients going getting car loans at higher rates without their income working for them. Definitely not the smartest or fastest way to look at those purchases. Our job is to guide you on what is the best way to structure those purchases. We do know they pop up. We've always said that drive the cheapest car your ego can afford, but more importantly, never spend more than 20% of your gross salary on a car. Like that's a really good rule of thumb. Don't buy a brand new car. They lose 70% of their value in the first 5 years. And then more importantly, we love knowing that most car accidents happen on a showroom floor. And so those hacks are really designed to sort of try and keep as much of your equity in your hot little hand where it belongs, but more importantly, protect your cash flow. And so if you are looking at car loans, personal loans, caravan loans, please come to us, let us run the numbers, let us map out the exact strategy on the fastest way and the most effective way to structure them so your income can be working for you on the debt, but more importantly, you're not blowing your cash flow by getting these super high rate car loans, personal loans that the banks charge. Now, another sort of discussion point is buy now, pay later. Now, some of you are using buy now, pay later, some aren't. Those ones that are, we don't feel that's required because you've got available redraw, we've got buffers, emergency funds in place. We don't need to be putting stuff on buy now, pay later because it does affect your credit score. It impacts that because of the credit inquiries that are left. And more importantly, is it's draining cash flow that we can't see. And so we are looking at just basically paying for cash for everything that we can do, doing a redraw for anything over and above that. But we don't need to be hitting buy now, pay laters. And more importantly, we don't need PayPal to be connected to the home loan. That PayPal account is for discretionary spending. All discretionary spending should be coming out of the weekly spend account. If you need an extra redraw to cover that, that's fine, but we don't have PayPal direct debiting out of the home loan. It cannibalizes the effectiveness of this home ownership plan and will slow your debt reduction because of the unconscious spending that it allows, which it's obviously designed there. So just in summary, car loans, personal loans, caravan loans, buy now, pay later. We need to obviously guide you through this. We've seen this over 23 years. The smartest, fastest way to eliminate that sort of debt. So we just ideally have one debt, one repayment. We're trying to streamline your finances so you only have to worry about two things, earning money and spending it. In terms of the interest rate future, we sort of are hearing a lot of the banks are pricing at least 1 to 2 rate rises this year. What that means is we need to be calling it tight now whilst those rate rises are sort of not kicking in, because every single month that those rate rises happen, then more cash flow is going out towards interest, less came off the principal. It's going to slow your debt reduction down. And so this is certainly the time to be making bank, stacking cash, paying down as much principal as possible, building that redraw and that safety net until you've got at least 3 months worth of loan repayments and living expenses. You all know what that figure is. It's part of the home ownership plan to save 3 months worth of loan repayments and living expenses. So no matter what happens to you financially, you may lose your job, you may get sick, you may get injured, you're not going to lose your home because you've got 3 months worth of living expenses and loan repayments stacked up there. So that's what this system built on, is how to protect you in those emergencies so that no matter what happens, your boat's not going to be rocked financially. The most important part here is if and when rate rises do occur, don't panic. Everything's fine. We know rate doesn't really move the needle, but it is something where we shouldn't be spending more because we're feeling a little bit more flush as rate rises go up. We just need to make sure that our expenses are kept in check. This month's club champion, she is a client of mine and one of those traditional clients who's just a little skeptical before they start with us as to it's a big step and wondering whether all the numbers that we went through were going to be true and correct. So she said now this is one of the best decisions she's made. Tina McLaren Congratulations, you paid $50,000 off your home loan in just 1 year. You're on track to own a property in 2 years. You've even had a holiday to Vietnam. And so, yeah, like she's just saying, no more stress. All the bills are paid on time. And so, like, this is full financial guidance. We're with her every step of the way, making sure that she's making the right moves and not having to do anything except worry about earning money and spending it. We're taking care of the rest. So congratulations, Tina McLaren, 50G off the home loan in 12 months. And yeah, 24 months from now, she's going to be free from mortgage prison. She's going to have all the salary to put towards lifestyle investments, whatever it may be. But just big congratulations to Tina, and looking forward to seeing who our next club champion is in February. Other than that, we've got some pretty exciting news of a lot of clients hitting us up for passive income plans. We're just organising those as we speak. And more importantly, just that the whole concept of debt recycling. How do we turn your home loan into a tax-deductible debt? So that's really the focus this year is how do we help you reduce your tax, create a passive income, and own your home sooner? If there's anything else you think that we should be or could be doing more, please let us know. We're always open to suggestions. And thank you to all those clients who are leaving those unbelievably generous Google reviews. It just helps us. Like a lot of people we're speaking to each and every day seem to think this is too good to be true, mustn't work. Why isn't everybody doing this? And so when they do go to Google review and they review what other people are saying who aren't on a payroll, people just like yourself, just gives them a peace of mind. Okay, well, enough people are saying this is the real deal. You can't fake Google reviews. And so if you could at any time, please jump on and leave us a Google review. It's just going to help tip a few of those people like, should I do this? Should I not? They get that sort of little bit of confidence that they can take that leap, try this home ownership plan, and from there change their family's financial future because they own the house in 12 years, which is our average client's payoff date, compared to 30 years. And what that means is 18 years, no mortgage repayments. That shifts everything when you're free from financial prison or mortgage prison. So thank you so much for trusting us with your business and your money. We're here to make sure that we're giving as much value as possible, and looking forward to giving you another update next month. See you soon.